Hey everyone, let's talk about the Federal Reserve, or as I like to call it, the money fairy. Today, we're diving into how a tiny Fed rate cut can actually impact us all, from big banks to little ol' us. And yes, we'll even get to how it might help crypto. So, let's go. When the Fed cuts rates, they're giving banks a little gift. Cheap money. Banks can borrow from the Fed at lower rates. Why? Because when borrowing costs less for banks, they pass some of those savings on to us. Cheaper loans mean more people are encouraged to spend, and the Fed is happy. See, when loans are cheaper, people are more likely to buy cars, homes, or maybe even that fancy coffee machine we absolutely need. And that spending keeps the economy moving. The Fed wants us to buy things. They're hoping a little rate cut will get us in the spending mood. Here's where the magic starts. Imagine the Fed cuts their rate by a measly 0.5%. Sounds small, right? But it's like a snowball rolling down a hill. Big banks borrow at that lower rate and pass it down to community banks with a little markup. Then those banks lend it out to, well, us, with another markup. By the time it reaches our car loans or mortgages, that little cut becomes a bigger deal. Alright, let's say Sam here wants to buy a car. Thanks to that 0.5% Fed rate cut, instead of a 6% interest rate, her loan might be more like 4.5%. Doesn't sound huge? Well, over a 5-year loan, that lower rate could save her hundreds, even thousands of dollars in interest. And it makes that monthly payment a bit easier. So why does the Fed do this? When the economy looks sluggish, the Fed cuts rates to give it a little love. Imagine it as a shot of espresso for a sleepy friend. When we borrow more, we spend more, and that spending keeps the economy from drifting off into a nap. And who doesn't love a wide-awake economy? That tiny Fed rate cut might be a drop in the bucket for the big banks. But as it trickles down, each layer adds a bit more to cover their risk. And, let's be real, to make a little profit. By the time it reaches us, that 0.5% Fed cut might mean 2% or even more off our car loan or mortgage rate. That's real savings from a tiny change. Alright, let's get to the juicy part, crypto. You might be wondering, what do Fed rate cuts have to do with Bitcoin or Ethereum? Turns out, quite a bit. When the Fed cuts rates, savings accounts and bonds pay less interest. So people tend to look for better places to grow their money. Stocks and real estate are popular, sure, but crypto also becomes an attractive option. Why keep money in a savings account at 0.5% when you could put it into something like Bitcoin with way bigger returns? Lower Fed rates mean cheaper loans, not just for cars or homes, but also for investments. Some people might even take out loans to buy crypto, hoping for high returns. So, as rates drop, we often see a boost in the crypto world, with more people buying and holding digital assets. As more people buy crypto, demand goes up, and with demand, prices often follow. Lower rates can lead to more people investing in crypto, which increases its value and encourages even more adoption. It's a ripple effect that can push crypto closer to the mainstream. So, a tiny Fed rate cut might seem like nothing, but it can ripple through the economy, affecting everything from our car loans to, yes, our favorite cryptocurrencies. By making money cheaper, the Fed pushes people to spend, borrow, and invest, which keeps the economy buzzing and, often, gives crypto a little boost along the way. What do you think? Will you be investing more with these low rates? Drop your thoughts in the comments, and don't forget to hit like and subscribe if you enjoyed this little economic adventure. See you next time.